In this video, we're going to discuss the three major land categories that you need to be aware of when building a land flipping business. It catches a lot of people by surprise that there's actually variation in terms of land subtypes out there. And what I see is so many folks are trying to do a little bit of everything. The reality is you need to know the distinctions between the three different subtypes and how to treat them within your marketing. And really, it's my belief that you should be specializing in just one of these subtypes when you're building your land investing business. Hey guys, my name's Sumner Healy. I run a business called LandInvestor.co, where we teach folks how to build wildly profitable land flipping businesses. The last 18 months, I've done a little over $2.2 million in raw land sales. I make these videos because it's fun and honestly I want to help people. So truth be told, there's actually many different subtypes of land out there. What we're really going to focus on in this video is just the main three that you need to be cognizant of. Now, the very first subtype is what we call an infill lot. Now, an infill lot is going to be something that's within a major metropolitan area, or it's going to be within a developed subdivision or a community. You're typically going to find these within a metropolitan area or maybe 20 to 45 minutes outside of the metropolitan area. Typically, these properties are going to be like a half acre and below. In a lot of cases, these lots are going to have all utilities already at the lot line. Think about it like a plug and play option. Really, the only use case here is to build typically a single family house, maybe multifamily in some cases, but for the majority of situations, it's going to be used for building a single family house. Now, because these properties have one singular use case, they're really tied to single family housing, both in terms of demand and then also in terms of pricing. You might find these lots trading at 15% to 20% of the actual value of single family houses within that community. That means if single family houses are trading for $300,000, these lots might go for $50,000, $60,000 in some cases. Now, outside of price, these are also heavily correlated to demand. Is there demand for housing in that area? If so, there's most likely going to be demand for these infill lots. If you're in an area where there's sparse demand, there's not a lot of new construction, these can be hard properties to sell. Now, this is a world within itself, and in a lot of cases, it's so different than the other verticals within flipping land. Typically, your end user is going to be like a new home builder, or in some cases, it's going to be someone who's going to build a house on their own. But more times than not, you're going to be selling to another business. So think about it more of like a B2B type transaction than like a B2C type sale. What's nice about these properties is typically there's an abundance of data. One of the biggest limitations about the land flipping business is the data is very, very sparse. And data comes down to ownership records in terms of who owns the property. Data comes down to comps in the neighborhood. And so when you have an abundance of data, it makes your decision making much, much easier. Now, on the flip side of that, that also means that these markets are typically more efficient. One of the reasons that the land investing business works and why you're able to buy at such large discounts in a lot of cases is because the information is sparse and the market is wildly inefficient. This is less so the case when it comes to infill lots. Typically, you'll be buying infill lots anywhere between 40% to maybe 80% of its retail value. Now, I'm not personally a wholesaler myself. Everything that we list are properties that we actually close on ourselves. But in the world of infill lots, wholesaling to end users like new home builders is a lot more common. One of the nice things about this strategy is that it allows you to buy at a higher multiple. You could be buying at 80% of its retail value and selling at 90 or 95% of its retail value. It also allows you to typically come to the table with less capital. If you're not actually closing on these properties, you might not need an acquisitions budget. That means if you're starting with a smaller bankroll, you can funnel that bankroll towards marketing and less so towards acquisition cost. Now, what we find is infill lots are very, very cyclical, just like the rest of real estate. And so it's something that you need to be mindful of in terms of working in areas that have real demand. And also, if there is a downturn, these areas can be seriously affected because when there is a real estate downturn, typically new home builds are going to slow. There's also going to be some level of correlation to the cost of building a home. What we saw in COVID is lumber prices went through the roof, and that is going to affect how many new homes are being built. Therefore, it's going to affect the demand for these properties, and therefore it's ultimately going to affect the price that you can sell these properties at. The second category is what we call rural infill lots. Now, these are pretty much the same as infill lots. Typically, you're going to be a little more removed outside of the metropolitan area, call it 45 minutes to maybe an hour and a half outside of a major metro. Typically, these lots are going to be less than 5 acres though. In a lot of cases, you'll still have city utilities available to these properties. So think potentially sewer and power and maybe even city water. Or you might see city water, power, and then you're not going to have sewer, could be septic. It really just depends on the market that you're in and how rural it is. Now, what we saw during the pandemic is these lots really boomed in terms of demand. People wanted to get outside of the city. They might not have been ready to take on a 40 acre or 100 acre property where it's totally off grid. This was a little more in the middle of the road for what they could handle. So we saw a big uptick in demand for these lots. Now, a lot of the general principles are the same here for what you might find with infill lots. Potentially, you're going to be buying at a little more of a discount than you could with infill lots, and wholesaling is going to be a little less common here. We find that these transactions are more B2C. agency. What that means is you're the business and you're selling to a consumer, and not so much you're selling to another business who's going to go and actually build a home to flip. There's a ton of parallels between infill lots and rural infill lots. The only difference is data might be a little more sparse than what you might find with infill lots, but it's still going to be much better than the third category in terms of data available. Now, the third category, and really where we've built our business and really where all of our deals fall under, is what we call rural recreational land. This is property that has a multitude of use cases. People could camp on the property, they could shoot their guns on the property, they could potentially build a house on the property, or maybe they just want to buy the property just to hang out there occasionally a few times per year. Now, what we find with rural recreational properties is this is where there's the most inefficiencies. This is where you're buying at truly the biggest discount. Now, on the flip side, the data is very, very sparse. There's not going to be a ton of comps to actually compare the property to, and usually the data can be pretty wild that you might get from the county recorder's office. Now, these lots can be anywhere from 5 acres to hundreds of acres. For these properties, access and topography and those variables are going to become much, much more important, because what you're going to find with these lots is there's a lot more variation in terms of accessibility, whether it's physical access or legal access, and because it's a larger property, topography is going to come much more into play than what you might find with infill lots or rural infill lots. Now, typically what we see with these rural recreational properties is demand's pretty steady. Rarely do you see huge spikes, although we did see a pretty strong uptick during COVID, and then rarely do you see massive downturns for these properties. They're pretty much steady Eddie across the board. Now, the end users for these types of properties are almost exclusively going to be consumers, and there's a bit of an expectation in this world that owner financing is going to be attached to these properties. It's very, very rare that you're going to see infill lots or rural infill lots with owner financing being pegged with them. But when it comes to these rural recreational properties, you're going to get a lot of first-time land buyers, a lot of first-time real estate buyers, and typically that demographic doesn't have a ton of liquidity, so more times than not, these properties are going to need to be paired with owner financing to have a sell-through rate that's reasonable. Now, I think what's important here is you got to figure out ultimately what you're passionate about. I know it's cliche and kind of trite, but it really is true. You're going to spend the bulk of your time in this business thinking about these properties, marketing to these properties, looking at these properties, talking about these properties to buyers, and so you better like them. And really, all three of these categories, you speak a different language. You're dealing with a different demographic. You're talking about different things. And what I find so many folks doing is they're trying to dabble and do a little bit of everything. It's true for life. If you're a dabbler, your results are going to be insignificant. I much prefer to specialize in one area and become a true subject matter expert within that field of land. So figure out what area resonates with you and go a mile deep on it. Don't play the game of going a mile wide. You really want to think about what could you spend the next 5 years, 10 years, 20 years delving into, and what area do you feel most excited by? There's opportunity in all three of these areas, but ultimately how you go about them is going to be different from property to property. Well, I hope you guys liked this video. These are the 3 main property subtypes that you need to be aware of. Before you start your business, figure out what area you want to focus in and don't look back. Just keep on going. If you guys like this video, please give it a thumbs up and maybe think about subscribing if you're looking to build a land investing business. See you guys in the next video.